Welcome back. Look, the White House will pump stimulus before we actually get the recession. So we're going to go through why the market heads for all-time highs before, before the end of the year, 2024, right? Maybe we get to 2024, but either way, all-time highs 2023. Let's go. All right, so first and foremost, what do we got? We got Black Friday. Shoppers spent a record 9.8 billion in US online sales. So this kind of reiterates, this just makes it very clear that the consumer is strong, right? Consumer is much stronger than people thought. So this will come into the GDP going forward. Where is the recession? Right? Where is the recession? This is not a political thing, but where is the recession, right? We're not going to see recession in 2023. Given this data, GDP will go higher. And I know a lot of people don't like that, but that's what's happening right now. There is no sign of recession. Now, there is going to be a slowdown at some point, right? Credit card delinquencies, auto loan delinquencies, those have been on the rise. Also, commercial real estate loans have been, on the rise also for delinquency. But the real question here, as these do rise, it's not like they're at all-time high levels. They've just been rising. And the question is, does it cause a deep recession? Right? Do we get an actual deep recession, or do we get a recession from this? And this is why I made this video, because I think this is what's coming around the corner. This is what we're about to see coming around the corner next, right? Keep your eye on this. This will come, right? Joe Biden has the lowest approval rating, right, of his whole presidency. And what do politicians do when they need more votes? What do? Just take a guess. What do they do when they need more votes? More stimulus, right? They buy votes, and that's what we're looking up against in 2024. So if we do get that slowdown, I know a lot of people are arguing, hey, we're going to see a slowdown. The recession is coming. Just you wait. That's all I hear. Just you wait. It's coming. You said that all 2023, and it didn't happen. It didn't come. And now we're getting a record online retail sales, spending for Black Friday, right? That's going to factor in. So really, you got to push the recession out to 2024. That's your only chance. It has to go to 2024. And I think, of course, there's going to be a slowdown at some point because seasonal spending is done, right? You go to January, people start to slow down. But this is where if we do get close to something really rolling over, I expect more stimulus, right? Relief programs for whoever it is that is struggling. And trust me, the government has more than enough spending in their account to make this happen. This is the Treasury General account. So they build it up by selling debt. Well, everybody says, oh my God, the dollar is going to collapse. Well, the dollar is the strongest currency in the world right now. It is the strongest currency despite that. This is not political. This is just facts. Okay, so the government spending account builds and then it spends, builds and then it spends. Right now, we just built it back up, right? We just sold. We're on our way to keep selling trillions and trillions. Well, and I don't want to say trillions. It's like 1.5 trillion total. We've probably done about 800 billion of debt. So what happens with that debt? They spend the debt. They create all the debt. They spend it. So 2024, if we do get a slowdown, if we do get unemployment above 4%, expect more stimulus. Now, I know what people are going to say next. Well, that's inflationary. We're going to see inflation. Okay. Well, even if inflation does come at some point, it's not going to come right away. It's going to come over time. The other part is that people don't understand is that inflation is two parts. It's not just overwhelming demand. It is also low supply, low productivity, right? And back when we did have the record high inflation, the supply chain pressures index, this is supply chain's pressures index. This is the supply chain. If you look at the whole global supply chain, this looks at a bunch of different factors. And it basically calculates how much pressure there is on supply chains. If you have a lot of pressure, you don't get deliveries on time, stuff doesn't get pushed through, prices rise because there's too much pressure. Well, those pressures are negative. There is no supply chain pressure, right? It's at historic lows, which tells you supply chains are healthy and that can absorb the demand that might come from more stimulus from the White House in the form of checks, right? At some point. So you can absorb those pressures is the point here. And the second part to this is productivity, right? Productivity is actually breaking out to record highs. This is the highest we've seen and productivity is basically a measure of output for every unit of labor. So you have a unit of labor, a person who works, 10 hours, whatever it is, their output is increasing. They're producing more goods and services per unit of labor. This helps to absorb inflation. Here we are at 4.7 today, right? So if you take out the post-pandemic, excluding it, right? Because obviously that was a big change in the data. You take that out. This was the highest productivity we've seen in 10 years, right? So productivity is picking up. It can absorb any type of inflation that does show up from more stimulus, from rate cuts, from the Fed's balance sheet starting to balance out, right? So today we are seeing that productivity is picking up, okay? And that's really strong. So I don't think people are factoring this in. They just see recession, we're going to slow down, but growth is being supported by real data. Okay, now we move to the S&P. The S&P is actually seeing less and less, okay, citations of recession on the earnings calls, right? Back down to normative levels. So S&P companies are not seeing a recession going forward. It's just not happening, despite what you might hear. Right? You got any? I'm gonna go through this and then we can do some disputes on there if you disagree. Anyways, look, S&P is not seeing recession. It's coming down from the peak in 2022. That's when we really had all the layoffs, and it's just not happening. Profit margins rising. What does that tell you? Growth, and this is for 2 quarters in a row. Profit margins are rising. How do you get profit margins rising if we're headed into recession? It's just not happening. Okay. Oh my God. Well, it's the big companies. Well, duh. They push the earnings of the stock market. Who do you think is going to push the stock market higher? Who generates the most growth? The big companies, right? So profit margins are rising. No recession in sight. And at the same time, when we look at 2024 earnings, 2024 earnings growth is actually set to go higher. Q3 GDP up. Yep, Miglo, 100%. Q3 GDP is up also. It is up. Right, we're gonna get that on Friday. We'll get to that data. We're gonna get that on Friday, or no, Thursday. My bad. Thursday we get I think it's Wednesday or Thursday. We get Q3 quarter over quarter. But either way, GDP is up. Right, beat expectations. So the earnings estimates are set to accelerate in 2024. What does that do? That brings demand for stocks, because everybody expected earnings to fall and go negative. Everybody expected weak earnings. Didn't happen. You saw the inflows to NVIDIA revenue, right? AI is real. Productivity is real. All this stuff is real. It's coming. So you get the earnings estimates for 2024 starting to rise. That's going to create a lot of demand. And what do we get this past week? The highest, right, weekly inflow to NASDAQ, well, QQQ, on record, right? You had the highest inflows to QQQ on record on this past week. These past couple of weeks, really. So there is demand for, it's really tech. There's a demand for tech. There's a lot of demand for tech. So we are seeing that. Okay. Also, corporate buybacks as a percentage of market cap hit the highest in recorded history. Okay. On a weekly. So these are buybacks on a record percentage of market cap. There's a demand for stock. So corporations, well, corporate entities, the corporate debt is being bought up. There's demand for stocks. They're buying the debt up. They don't see a recession going forward. And trust me, the market is much smarter than any individual who looks at a couple charts that are already priced in. Next, all-time high cash level. So what do you see? You see that there is no recession in sight yet. Maybe 2024. Joe Biden probably prints, more than likely. The Treasury General account has a lot of spending power. The market is up. It's already almost at all-time highs. It is climbing. Profit margins are up. Earnings are up. And still you see an all-time high of cash levels. This is money market funds, right? People are getting that 5% interest. Well, guess what? If the Fed does cut rates at some point, that money is going to leave, not right away, but it will go back into equities, especially if you get all-time highs. So you still have a lot of cash, a lot of gunpowder on the sideline, even though the inflation picture is going lower. What do I mean by inflation, right? This is the biggest issue right now is inflation. And inflation is at 2.5%. Don't listen to me. Hear it from Kashkari himself.
What is it that you're looking for?
Well, I'll give you some good news. Core PCE on a 3-month basis is running about 2.5%. And it's low.
Yeah, 2.5% on an 3-month annualized basis. 2.5. So I give it, and right now, Tom Lee said that inflation is falling at 0.2, 20 basis points. So that means inflation should hit over the next 3 to 4 months. It should be core PC on a 3-month annualized basis at 2%. It'll be at the Fed's target, right? So cash levels all time high. Here's another part. There's a lot of people on the sideline. Here's the next part. Low margin leverage. So this is margin debt, right? This is FINRA margin debt. Basically, people leverage up for the market, and leverage is very low. Okay, people are not leveraging in the market right now. We're very low. When you get to the highs, that means there's a lot of leverage. People are using leverage to buy stock, to buy equities, to trade options, whatever it is. That is not the case right now, right? Margin debt is at the lows. So there's a lot of room to the upside. That's the point, right? A lot of cash on the sideline, all these things taking place. And then we got next week, we have GDP quarter over quarter on Wednesday. Thursday, we got core PC. Actually, we just look at the calendar here. We also have ISM. That's going to be big. All right, so GDP growth rate quarter over quarter expected to come in at 5%. That's huge. That's incredible growth. That is going to FOMO in a lot of investors. And guess what? If it doesn't come in at 5% and it comes in lower, well, yields are going to stay soft. So either way, the market can only go higher, not on a day-to-day or week-to-week basis, but going into next year, there's a lot of catalysts, because when yields come down, because growth is weaker, that is going to juice earnings. That literally juices earnings. If earnings go up, well, earnings are up. So there's a lot of demand for stocks, right? Core PCE, month over month, expected to come in at 0.2. This is going to really launch the market. When you see core PCE, and I want to see the year over year data, but on a month over month basis, it's coming in lower and lower and lower. And as long as this plays, and guess what? This has been driven by oil prices dropping. Oil is low. Oil is very soft. So if oil is so soft, that is going to trigger inflation to come in lower and softer. And guess what? You're going to get you're already seeing a chase in the market. Big fund managers are chasing stocks. That's why the Qs are exploding. So as soon as inflation comes in lower, GDP comes in hotter, you're getting accelerating growth or steady growth. Let's just call it steady. But inflation is falling. The consumer is still strong. Even if the consumer weakens into Q1, expect Joe Biden to hand out checks. Oh my God, inflation's coming back. I don't think so. Productivity is up. Supply chains are very. There's no pressure on supply chains. Immigration is coming in, lowering that wage growth. I keep seeing people on social media say wages is driving inflation. What the hell are you talking about? Wage growth is down. You guys are tripping. Wage growth is down. I don't know what charts they're looking at. And then when I show them the charts, you know what they say? Well, you know what? You trust that data? I'm like, bro, so what data do you trust? If it was down, if the data's in your favor, you trust it. But if it's not, you don't. That's silly. What up, Hassan? So point blank, these are the big data points going forward. GDP growth. We got core PC, personal income. This is just the consumer report. And then the ISM manufacturing index. This is our leading indicator right here. Okay, this actually kind of fell off the last time we had it. So this kind of fell off. So we'll see if it picks up going forward. I don't know. We'll see. If it stays low, well, that's a sign that the manufacturing economy, the business cycle is still soft. It is still soft. But you do have a record of construction coming in, and key to this report is going to be new orders. I want to see new orders. New orders is the forward-looking indicator. It's the forward-looking growth indicators. And if new orders are up, they're up. And then you got Fed chair speech, right? And the big thing is going in, we have a lot of, this is going to be a big month. The market could literally be at all-time highs by the end of the month. It's very possible. I think it is. I'm betting on it. I'm betting on it because the data only gets better from here. The data can only get better from here. What is going to fall off, right? What is actually going to fall off? And then on the side, let's check this out, right? Let's go ahead and take a jump over to crypto. On the other side of crypto, you have the biggest use case playing out right now. The market, Chainlink, is about to break out again, okay? This is going to be the big mover here, and I'm going to pull up why this is the big mover. A lot of you guys hear me talk about it if you're normally on the channel. I was banned last week, so that's why I wasn't on here. I don't know. I don't know what it was. I got banned. So the catalyst for Chainlink is tokenization of all real-world assets. The tokenization of all real-world assets. That's a $16 trillion addressable market. Okay, every bank is literally tokenizing their assets, whether it's their treasuries that they hold, their bonds, their equities, which are their stocks, real estate, they're going to tokenize it. Currency, they're going to tokenize it. Any asset that they can get a hold of that's going to be on the blockchain. And so that's what Chainlink enables. No other crypto, it's not even really crypto, it's an infrastructure for blockchain. None of them can compete. They don't come close to it. Why is blockchain tokenization so important? Because it gives you 24/7 trading on the blockchain, gives you instant settlement, so there's no 2-day wait to settle a transaction, which slows down the system, which makes it very inefficient, makes it very expensive, and it increases insecurity, increases security risks, right? So this gives you instant settlement, low transaction fees if you're on the blockchain, if you're tokenized, low transaction fees, and then it increases liquidity because now you can connect to other blockchains and settle instantly. There's no liquidity breach, right? There's no liquidity constraint, I mean. So that's what it does. Increases security at the same time. So the biggest players in finance, they don't want to use other blockchains. They're not going to use Solana. They're not going to use XRP. Okay, they might mess with it, but they're not going to put their value on XRP. They just need a connector to connect to each other so they can transact their own value, right? That's all they need. And that's what Chainlink does. Chainlink is a price feed. Not only that, it's also a computational service for the smart contract internet. The internet is going to be on smart contracts. This is what people don't get. The entire web over time is going to convert onto blockchain. Everything you do online will be on a blockchain. And this is the only infrastructure that actually is building that whole future for computational services, right? Anything computational. So that is the future. That's what we're looking at. And I expected it's already starting to break out again. This is, if you ever want to know, what are you, this is not financial advice. This is my opinion. This is purely entertainment, education, but this is my big bet over the next 18 months. Outpaces Bitcoin, outpaces Ethereum, outpaces XRP, I think it heads for the second biggest coin. I mean, third. I'm sorry. I think it's going to be the third biggest coin going forward. We already know Binance is screwed. Binance got screwed, right? Binance coin is a scam. So this is not a scam. This is literally backed by Swift Network, JP Morgan. They're using the token. Anybody that's going to tokenize their assets have to use the CCIP, feature from Chainlink. That is the world going forward on the blockchain. This is the earliest you're going to get in on anything like that. Everything else, everybody knows about it. Everybody else is using AI. You can only get exposure to AI through Microsoft, Google. They're already $1 billion, $1 trillion companies. They're too big. Tesla has a big chance, but they're already too big. Chainlink is small. It's 9 billion, 8 billion, right? So this is your opportunity. I've said it before. This is the opportunity right here. It's at $14. We called it back here at $5. We said, we're going to buy Chainlink here. Not financial advice. And now it's up triple. And some of you guys in the chat already know. If you got in on Chainlink, shout out to you. You guys bought it early and you're up a lot. And it feels like it's up too much, but it's just getting started. This bull market is just getting started, right? This bull market is just barely starting to get started. No, I'm just kidding. I was looking for I can't find it. So this bull market's barely getting started. The Bitcoin ETF literally brings in more demand. Let's go check out Bitcoin. What is Bitcoin looking at? I just made a new high too the other day. What was this? Friday. So what people don't get here with Bitcoin and crypto, this is emerging markets. This is the only opportunity to make a lot of money. This is it, right? A lot of people who already have money, they don't really look at it. They're like, I don't want to be risky. I don't think Bitcoin does a 10x on this cycle. Maybe it does a 5x, gets up to 150, maybe 200. But the other, quality crypto digital assets can do a 10x, right? Especially Chainlink. That's the safest one, in my view, from my research, that can do that. So here's what's going on with Bitcoin, though. You're getting a supply cut in next year. I think it's like May. Okay, May, somewhere pre-summer. They call it crypto summer because everything goes bananas. You're going to get the supply cut in half for Bitcoin around this time. That is less supply. At the same time, you're getting the ETF coming on in January. It could come this month, next month. We don't know. That is insane amount of demand while the supply gets cut in half over the next 18 months. There is not an asset this big that is going to reap the price action that Bitcoin will, right? That is a non-crypto. You're not going to see that. Maybe a penny stock, but not 500 billion. Nothing can move like this, right? Now, on the other hand, you got Ethereum, same thing. The more Ethereum grows, the more that they burn the actual token. The token gets burned when it gets used. So it's deflationary. There's less. It's very scarce. Okay, it is very scarce. But this is also 300, 250 billion market cap. So it takes more to move. Chainlink is tiny, and it also has the widest use case of all cryptos because it's going to connect to every single fiduciary, every single bank, every institution will connect to Chainlink, and CCIP is going to collect revenues. You can stake your Chainlink also into the future. You're going to be able to stake it. So all those services that get created on the new internet, the new web, Web3, listen, Web3 doesn't work. There is no Web3 without Chainlink. This is what people don't get. Oh, Web3, I'm so excited. Well, guess what? None of your decentralized finance works without a connector, without an oracle, without something to connect to the real world. You need TradFi, you need JP Morgan, you need Swift. You want the big banks in other countries to connect, to actually plug into crypto. You can't get that without Chainlink. So if you own it, you own the network that actually creates Web3, right? And allows other banks to scale. This is a $16 trillion opportunity, going forward. It's an $80 trillion opportunity according to Citibank, 80 trillion if you go out to 2030. We're not going to take any guesses on how big the price gets out, then. But the point is, DeFi doesn't work without Chainlink. This is the most widely used crypto on the planet by far, not even close. And it has the widest use case with the biggest players, the biggest banks. So that is your case there. That's the case for Chainlink, right? There's more. There's much more. Trust me. But you got to stay simple here. You got to be simple here. Everybody's going to create a stable coin. Central bank digital currencies don't work. They don't even work without Chainlink. Central bank digital currencies literally need cross-chain interoperability. They need tokenization to work. What is tokenization? You think about this. You get real estate, right? Let's say you have some real estate. Let's say you have this is kind of how tokenization works. Let's say you have like this real estate property. Well, what you're going to do is when you buy or sell real estate, you're going to receive tokens, right, from the bank. And I'm going to make it really simple. You're going to receive tokens. So let's say you buy this real estate property and then you receive like 100 tokens. It's probably going to be like 100,000, but you get 100 tokens, right? Each one of those tokens you can now sell to somebody else. So they get a piece of it. It's in a token. It is called tokenomics. It's now part of a token. So you can buy, if somebody over here wants to buy a token, they can buy a token. Now they own a piece of your real estate, but it's cut up into pieces. That is tokenization. And it's not just in pieces. It's more secure. It's faster. It settles instantly. There's proof of reserves that prove that the asset is there in real time. That's what, oh, you guys can't even see this on here. My bad. Anyways, yeah, that's what's going on here. And we are headed into the bull market. I'm not going to stay on here too long. You guys got questions, let me know. But the point I'm making here is that the bull market has started, right? The bull market has started, and crypto is going to be the best performer going forward. You got to have a long way for Bitcoin to go higher. You got a long way to go. You have a long way to go. And you can thank Joe Biden, because at some point he's going to print more money. He's going to print more money. And all you guys, I know all of you guys are hearing, oh my God, the economy is falling apart. The economy is weak, bruh. Like, productivity is picking up. Okay, productivity is picking up. The unemployment rate is not spiking. Why? Because of the gig economy, because of the hustle economy. People are not getting unemployment because a lot of them are just switching jobs. What are they doing? OF. I'm not going to say it. They're doing OF, right? Girls are making millions per month. It's insane. You think they're going to register for unemployment? You're stupid. So number two, people are hustling. There's all kinds of online jobs. They're not filing for unemployment. They're making more money doing YouTube. They're making more money through these other platforms, and they're spending that money, right? So there is a new hustle culture, and you got productivity picking up, and you have AI increasing more productivity, which means prices are going to come down. There's going to be disinflation, or they stop going up so fast. And then you get deflation in some areas, right? That is coming. So the stock market's going higher. There is no recession yet. If there is, Joe Biden steps in. Inflation is going to keep falling. And I think the next catalyst is going to be on Friday when we get core PCE. That is the Fed's preferred inflation gauge. They're pretty much going to say, hey, we're done. We are done hiking. It's time to think about cutting rates. The market's already pricing in rate cuts starting in March. Do I think they cut in March? I don't know. Maybe May. It all depends when the consumer falls off. So when people tell you that the consumer is weak and that's a recession, hell no. The consumer weak calls for more liquidity. It means that global liquidity is about to pick up. Check this out, right? This is the global liquidity right here. Oh, let me get this out of the way. This is global liquidity. It's starting to pick up. It's being led by Japan. Japan is printing a lot of money. Now, this might not come into the U.S. economy very fast, but it does go into crypto. it does go into crypto, right? This is the central bank balance sheet of Japan. They print, right? It's more money in capital markets goes higher. Here's the other thing. When inflation falls, liquidity goes up because it costs less to produce. When inflation falls, it's not just a one standard, it's not just a one move lower, right? On inflation, it's a two move because lower inflation, higher earnings, higher earnings, higher leverage, more earnings. So as liquidity picks up, crypto is going to benefit the most. Mark these words. It's going to fly. It's going to be volatile. It's going to have nasty rips to the downside. Don't get me wrong. But we're in early cycle of crypto. We're in the early cycle. And I've been saying this for a while. A lot of these guys on here now on TikTok, on YouTube are finally saying, oh my God, they're starting to flip now bullish. You know, we've been bullish the whole time, down since here because global liquidity picked up, because the ISM bottomed out. Okay. And it's really about liquidity at the end of the day. You want to see something, just look at liquidity, right? Also, Fed net liquidity. Let's look at the Fed's look at Fed's liquidity here. Okay, we also had what kind of liquidity? We had not the Fed funds rate. Where's the Fed net liquidity at? Oh, here it is. It's red. Yeah, it's here in red. This is Bitcoin. This is Bitcoin. This is not Fed net liquidity. They look similar. Maybe it's down at the bottom. I'll just throw it on. Fed net liquidity indicator. There it is. All right. See how it looks one for one with Bitcoin? Right? It looks one for one with Bitcoin. Why is that? Why does it look so similar to Bitcoin? Because crypto is a risk on asset. And when liquidity comes in, when there's more money in the system, and it doesn't go into the economy is weak, right? The global economies are pretty weak, but that doesn't mean it's going to be a recession. Recessions happen when you're caught off guard. Rates are up. So that is a cushion to prevent recession. When rates are high, that is actually a cushion. It's almost like you have room to slow down the recession. If rates were at zero, you'd be in trouble. You have no choice. You're going to go into a recession, but rates are up. Okay. Your biggest fear is inflation, and that's not going up, and it's oil. It's coming from oil. So anyways, Fed net liquidity is picking up, right? You see Bitcoin starting to climb here. This is your indicator. When this thing breaks out, it's going to go bananas. So stay tuned. I'll be live tomorrow. Answer the questions. Nvidia is consolidating. We'll see how it does. Anyways, you guys stay blessed. I'll be back on, and stay tuned. This is a bull market. Let's go. Catch you.